This will be our one and only video for our chapter number 6 dealing with other or miscellaneous itemized deductions. What you're looking at is the old Schedule A for 2017 when the rules were quite different. So let's kind of review this older form and compare it to the current rules. If you remember that itemized deductions are classified into different categories. So here's the first one for medical and dental, where we would have to reduce the total qualifying medical costs by a percentage of our adjusted gross income. And here we see the correct current rate of 7.5%. It's kind of been flip-flopping back and forth between 7.5% and 10%. But our current rule, as shown on this older form, is now reverted back to 7.5%. So again, you would reduce the total of your qualifying costs in line 1 to get the remaining amount here. And again, for most people, because their qualifying cost is relatively low as compared to a higher adjusted gross income, there's probably no medical costs being deducted on most Schedule A's. For the second category of a tax deduction, again, the rules have changed drastically. If you remember, we call this state and local taxes. And under the current rule, these amounts here are limited to $10,000, where in 2017 and prior rules, there was no dollar limitation. For the next category, for home mortgage interest deduction, that's the main one here in this section, there was, of course, a loan limit. The current limit for 2018-19 all the way through 2025 is a loan amount of $750,000. Prior to that, like on this 2017 form, the loan amount could have been up to $1 million, possibly more if you included what they call a home equity line of another $100,000. But that has totally been eliminated under the current rules. The next section is charitable contributions, and it used to be you could deduct here cash contributions up to 50% of the taxpayer's adjusted gross income. The current rule is now it's up to 60% of AGI, and for 2020 it's just a special situation, I guess, because of the COVID situation. For 2020, up to 100% is deductible for your AGI. Again, that's for cash contributions. The next section, casualty and theft losses, is now only for federal declared disaster areas. Okay, it used to be for a lot of small casualties and theft losses and accidents, but now pretty much it has to be a federally declared disaster for any taxpayer to claim a dollar amount here on Schedule A. The big change, and really not covered here in Chapter 6, is this job and miscellaneous deduction. This whole section is gone under the current 2019 rules. It used to be that employee business expenses, fees for tax preparation, and for investments could be deducted here. The big ones usually are union dues, maybe uniforms that you cannot wear outside of your job, maybe education. Again, all of these would be costs that's not reimbursed by the employer. You would take a total over here, and then you have to reduce it by a percentage of your AGI, here 2%. So for most people, just like medical, there's probably not anything to be deductible here. But for 2018 through 2025, this whole section is gone. Okay, it may come back. Rules can always change again, yeah, or extended. This is the last section here on Schedule A called miscellaneous, and they don't give any specific detail here, but the common ones would be gambling losses, but only to the extent you are reporting gambling winnings. And you don't subtract the two directly. Yeah? If you do have gambling winnings, It has to be reported back here on schedule number 1. And probably down here, yeah? The gross gambling winnings over here in line 8. Okay, my pen is not working. Here, gambling winnings, the gross amount, yeah, before any deductions for losses, the dollar amount. And you would total it up, and then back here on the 1040 form, you would be reporting it in line number, looks like 7A. But then any losses during the year, again, let me go back to the 2019 Schedule A, yeah, not the 2017. So you notice that miscellaneous section is gone. We still have this other deduction, yeah? So gambling losses would be reported here to the extent of any gambling winnings. So let's say that you had won $1,000, reporting back on that Schedule 1, but you lost $3,000 during the same year. What you get to deduct as an itemized deduction is only 1,000 up to the amount of the winnings you had. The excess losses, in my example of 2,000, is just a loss. You can't deduct it. Okay. Another possibly other deduction here that I've seen. Let's go back to the 1040 form. So if you remember back in chapter 3, we talked about these other types of income, including pension and annuity, where the amount collected by the taxpayer may not be fully taxable. We had to go through a formula to calculate the amount that is taxable here in line 4D. What's happening is that the taxpayer is recovering back tax-free costs. But if the taxpayer passes away and hasn't recovered all of their tax-free basis, any unrecovered cost can probably be reported here. Yeah, I'll just put a dollar sign here in this other itemized section. It will be reported on the last tax return filed for that so-called decedent taxpayer. Not common, but typically taxpayers of age right now may have had this type of unrecovered costs. Okay. So we total up all of our itemized deductions and then deduct it if it's larger than the standard deduction. Let me show you back here on the Schedule A for 2017. So here would be the total itemized deductions. But if the taxpayer's adjusted gross income exceeded certain dollar limits based upon their filing status, the standard itemized deductions may have to be reduced. Okay, that's not applicable right now under the current laws. It may come back again, yeah, after 2025, but we don't have to worry about that reduction. Okay, so that's it for chapter number 6, this short chapter. Okay, make sure you go through, read that chapter. It shouldn't take too long.